Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday, the 2nd of August, 2021, getting on to 6:30 p.m. Central Time. So I'm going to hold the live webinar this coming Wednesday at 12:30 p.m. I'll start it. I open it at 12:15 p.m. so you can get in. If you have questions, you can write me them. But I really prefer that once you sign up, when you get the email that gives you your user ID and password to get in, you'll see my email address. Write me your questions way ahead of time. Let me prepare the charts so we just go whipping through them like that. That really helps. Remember, the webinar is all of 15 to 20 minutes long. I do not record it for posting on the website. You either come or you miss it. It's really that simple. All right, so let's talk about the events of the day. You know, the stock market started off in a very strong note, and right at the end of the day, it just started caving in and kept caving in until we had some negative closes, in fact. Could be that we made a trade top in some of the markets. We're flirting, I want to use that word very carefully, we're flirting with the idea of losing the bullish embedded reading. You have not yet lost it, you could. Why? The market got spooked on the COVID cases. What do I mean by that? You know, we keep reading the numbers as they're going up. There's positives and there's negatives. First, the White House said that 70% of the people that can get vaccinated in America are now done with that. So I'm talking primarily everybody that's an adult. That's a big number. It's a month late. He thought he'd have that number, Mr. Biden, President Biden, by July 4th. Well, August 2nd's about a month later, but we're still there. That still leaves a big road for us to get the other 30% vaccinated. Just look what's going on down south. Look in your own area. Where are the people getting the new virus from? They're getting it from primarily the people that aren't vaccinated. We've been told, whether you're vaccinated or not, can carry this new Delta version. That spooked the market. We saw the Chinese numbers are slipping a bit. 32 provinces I read in China now have serious cases of COVID. That impacted the energy. While they're up here, they were down 3% in crude oil today. So the markets got hit because they're one of the major importers of crude oil. The stock market looked around it later in the day, saw a bid in the bonds and notes. We had some of the lowest yield closes recently, period. That's enough to spook the market. But as you'll see when we review the charts, the market's got up to points where they should have a lot of resistance right here. As for the foreign currency, sort of a mixed bag today. Metals a bit lower. Let's get into the charts. On the weekly area chart of closes, starting the week off, we're down 0.6%. You're certainly not breaking very much. I think you'd agree with that. When you look at the chart actions, we've gone into a distribution area. That's what I call that. The pattern is still higher lows, higher highs. Let's check that out, make sure I'm right. The high here, I'm wrong actually, 422.5. And the high today just missed it at 419.75 and backed off. But we still have the higher lows. So you're pausing. When you get a pattern like that, you start pausing. Now, I don't know if that's going to end up being a swing line high or not. It won't if you take it out today. If it's not taken out Tuesday, if it doesn't take that out, that does become your swing line high. I don't care if you make a lower low, have an inside day, that's how it'll work. The support of the market is 43.65.90, so you'd say to yourself, well, that's okay. It's really not okay, because if you take out 43.70.75, you end up with a pattern of lower highs, lower lows, and then if you close under that number, you actually get a bearish scenario, and you could start a downside correction. When you look at Bollinger Bands, you have not been able to hit it. That's bothersome again. What the market is trying to hit are called the window envelopes. I don't show everything in this free version. I show that to my paid subscribers in the morning. Here is the market flirting, and that's what I want to use the word, flirting with losing the embedded reading. As you can see on the close today, it was 83.05, it's 82.64. It has not lost that reading. Should the market take off again, it keeps it, and away you go. Here's the thing you don't want to get. You don't want to get what my one of my brokers, Ron, calls stochasticitis, where you're watching this tick by tick. You'll go crazy in the head. Turn it on every now and then. If it loses it in the last few minutes of trade, you want to be out. Any reading under 79. But if it flirts with 79.80, it's just going to make you crazy in the head. In the NASDAQ, you never did embed. You got overbought. You're in an uptrend, pausing. You now have, again, lower highs, higher lows. It's a pause. Battleground's most likely going to be the 18-day average of closes. You might even be caught in the upper and lower Bollinger Bands. The nod has to go where? It's pretty neutral. While the swing line and bias are up, you're overbought. I don't give anything the nod there. In the Dow, you still have the embedded reading. You're flirting, again, with losing it. You're 80.74. The market held, again, the 18-day average. It's got to get up and over the highs of Monday in order to prove it's good. If it doesn't and you're lower on the day, be careful. You probably lose that embedded reading. If the market takes off again, this was no more than a one-day correction and away you go. The proof's going to be in the pudding tomorrow as we do this. In the Russell, all you did is what I thought you would do. Last week when I was back, I said, watch out here. You probably got a stiff resistance at the 100-day average. When you get under a key moving average and you rally, often that becomes a resistance point. I can only use the word often because nothing works all the time, but that's very typical. When you were over the number here and you break back to it, it basically held itself. Then it started mishmashing right here. How do you like that professional word, mishmashing? Back and forth, let go, and it's been a resistance point since then. I'd be very cautious here. You have a higher high, lower low scenario now. By the way, I want to come back to that. If today's high in the Russell is taken out on Tuesday or Wednesday, and that is 22.57, as you can see, if that's taken out, I think the market will make a run to the wherever the upper Bollinger Band is. Right now, it's 22.8070. So that's another thing I'll be looking at. Why? Because it's an outside day down, and if you get over the high of an outside day down, within 2 trading sessions or 2 bars on a chart, depending on the kind of chart you're looking at, I've discovered in my analysis that the odds strongly favor you'll make a run to the closest moving average or a Bollinger Band. The stop for those guys would be under the lows of today. In the VIX, the market came back, challenged again the 18 and the 100-day average of closes. Momentum is oversold. Trend is down. Bias is up. It's not giving us an edge one way or the other. Now, in the bond market, here's what we were talking about. Here you have a market that's got higher lows, lower highs. I had drawn for my morning subscribers line connecting that part and this part. And I said it's got to break out one way or the other. If it breaks out to the upside, it probably is going to move to the upper Bollinger Band. That's what happened today. I didn't expect it, but it happened. You went right to the key number, and you stopped right on it, and you're backing off. But you're still very much in an uptrend. You've lost that period of time where you were just consolidating. It's reestablished its uptrend, and it's not overbought. In the 10-year note, identical. You were hanging in here. I can just draw this back. Higher lows, a lower high. The key is to get through this if you're going to keep the uptrend. Momentum had flattened out, and then the next objective, potential one at least, is the upper Bollinger Band, at which point I think the pros will take the money off the table. And that's just what it hit today, and that's what I think they did. So if you were to ask me, do I think the pros now are as long as they were? By far not. I think they took advantage of this rally against that number and stepped away. That does not mean they're bearish, but you take money off the table if you can get right. Dollar index, I'll stick with what I said last week. First challenge of the lower Bollinger Band in an oversold condition is where I teach that the traders take money off the table. Period. And I think they're out of this market. I think it's oversold in a downtrend. Eurocurrency, the flip-flop of the dollar. Here you go. And remember, they flip-flop because the dollar index is heavily, heavily weighted with the eurocurrency. So it's not 100%, but it's certainly 40% or so of it, the euro. In the British pound, what do you do the first time with me that you get up to these key numbers? You're approaching the combination of the 100-day average and the upper Bollinger Band overbought. I would teach that if you're long, that's where I'm looking for the pros to step out, and they did. I don't care what it does from there. That's the money. It's off the table. I think the pros are gone. They're gone, out of the way. They took a vacation, all right? In Bitcoin, you keep running the upper Bollinger Band in an overbought condition. It's not forcing it to embed. It's an uptrend, but it's a very difficult play. Almost, from my point of view, almost impossible to trade because it's forcing you to buy at the Bollinger Band in a not embedded situation. First of all, I'd never have a client buy the upper Bollinger Band. Never said to do it, not going to, that I can recall. Okay, I've been at this 51 years. I really learned Bollinger Bands maybe 20 some odd years ago, 30 years ago, when John Bollinger came out with it. And I taught myself, and those are the things I watch. In Brent, okay, we've been fighting a battle at $1 back and forth. I wish I could tell you that it's trending. I don't see it as doing so yet. And you could even see in the Brent crude, it's stuck at the 18-day average of closes in an overbought condition. Yes, the trend is up because it's hanging in right at that average, and you got higher lows, higher highs, but it's so overbought. How do you get involved? Same type of thing? No, not in the WTI. WTI broke through this previous low, so now you got a higher high, lower low in an overbought condition. It ran out of upside steam. It's not in a downtrend, but it's no longer in an uptrend either. Same in the gasoline market, except gasoline, what does it have? If we step back from today and go back to the first day it embedded, not here. Day one was Thursday. Friday, it embedded. It's day two. Today, it embedded. So, with that embedded, are the pros going to buy this market and try to support it? The answer is yes, unless you close under 79, at which point they'll throw in the towel. So, I do think the pros are trying to buy here, probably very close to this 18-day average, maybe a bit above it, but not that much. Looking still to see if they can get to the upper Bollinger Band. So you put it together, that's the game that I'm seeing. It's interesting and dangerous. Now, if you were to ask me the one thing that I'd have to hang my hat on if I had to do only one part of all the trade analysis that I do, it would be the embedded Bollinger Bands. Well, it's actually enhanced Bollinger Bands with the embedded slow stochastic. Take a look at this.